Our prediction is that either the U.S. federal government or at least one U.S. state will establish a Bitcoin strategic reserve. We have seen a pattern of Bitcoin making lower highs and lower lows. We'd have to see significant adoption by central banks or governments in order to get the volatility to fall.
Joining us now is Matthew Sigel. He is a head of digital assets research at VanEck's. We'll be talking about his outlook for Bitcoin and the crypto landscape. Welcome to the show, Matthew. Good to see you.
Hey, David. Thanks for having me.
Well, let's start by talking about VanEck's $180,000 Bitcoin price target for 2025. Let's start there. Let's walk us through your assumptions behind that call and the macro drivers that will take us there.
Yeah, sure, David. We take a three-phase approach to Bitcoin price target. Over the medium term, we benchmark this asset to gold, and specifically the 50% of the gold market that's used for speculative purposes rather than jewelry and industrial purposes. So if you assume that Bitcoin can surpass that kind of 50% of gold market cap level, that would be a $450,000 Bitcoin price target. So that's our medium-term assumption for what Bitcoin can reach over several years. In the near term, we do tend to assume that the 4-year cycle will hold until the market tells us otherwise. And the most explosive part of the Bitcoin cycle tends to happen in the 1 year after the halving. So we had the last halving in April of last year. There was a nice election-related run-up. If past is prologue, then 2025 should also be a strong year. The question is how strong. Each cycle for Bitcoin has produced smaller and smaller returns. The previous smallest ever cycle was 2,000% from the trough to the peak. So if we assume a 1,000% price return, that would be roughly 180K for this cycle. So that's our base case. There's a number of short-term indicators that we're watching that might either call the cycle ahead of that level or perhaps elongate it. But my best guess is 1,000% from trough to peak is a reasonable case for this cycle, likely to peak out in Q4 of this year.
Why would this cycle necessarily behave like past cycles in terms of how Bitcoin behaves post-halving?
Well, this will be the fourth cycle, and the previous three reliably followed the 4-year cycle, whereby the halving catalyzes a shakeout among Bitcoin miners. Some are forced to disconnect or sell their coins. The hash rate initially falls in the couple weeks following the halving. That clears the market and sets us up for a year of a bull market. So, I can be convinced that the 4-year cycle is no longer relevant, but I need to see the evidence of that. So the base case is that it continues.
And going back to your medium-term forecast for why Bitcoin may ultimately reach a certain percentage of the gold market cap, I believe you said half at some point. Are you assuming then that Bitcoin will start trading more like a strategic safe haven reserve asset eventually, which is kind of the role that gold has held for central banks for many decades now?
That's a fair question. From a volatility perspective, we have seen a pattern of Bitcoin making lower highs and lower lows in terms of its volatility, but it's still, 3 to 4 times more volatile than the S&P and gold. So I think we'd have to see significant adoption by central banks or governments in order to get the volatility to fall dramatically. We still refer to Bitcoin as a chameleon. Its correlations change over time. Right now, the correlation with the Nasdaq is a bit higher than many would hope for out of a quote unquote uncorrelated asset. So yeah, over time, the long run, I think it will fall. But for 2025, the correlation with risk assets and the Nasdaq is still pretty high.
There's just a lot of volatility this year, and we have trade wars going on. We have uncertainty with policy. under the Trump administration regarding tariffs, right? We have uncertainty as to when and if a Bitcoin strategic reserve could actually be implemented. A lot of the price, people tell me, factors in the prospect of a Bitcoin strategic reserve. How does uncertainty around these policies play into your forecast for the 180K in the medium term?
Sure. So in previous cycles, in the post-halving year, which again tends to be among the most positive for Bitcoin, there's still the likelihood for a number of drawdowns. So as an example, in 2021, there was a 40% drawdown in the middle of the year before Bitcoin made subsequent all-time highs. There were nearly a half dozen 10% corrections. So that is, I think, just one of the characteristics of this asset, given the high volatility. And I think that'll continue. Now, I noted that rather high correlation to Nasdaq. It's nearly 0.3 on the daily, the correlation with the Nasdaq. So if there was a significant risk-off event, either because of escalating trade war or a Fed pivot and a kind of reignition of inflation concerns, I think most market participants would still take that as a negative for Bitcoin, at least its first instinct. Now that could change if geopolitical actors or someone else decided to buy Bitcoin and express their uncertainty through a purchase, but that would be a break from what we've seen over the last couple of years, which is Bitcoin is tending to act with risk assets. It tends to perform when the dollar is weak. So those would be the most, I guess, powerful backdrops is money supply continuing to grow, contained inflation, the Fed cutting. I think these would be kind of the most positive backdrops for Bitcoin. And the reverse, I'd have to consider a negative. I will throw one more thing out there. I tweeted this out, a poll on whether asking market participants if Elon Musk's Doge, Department of Government Efficiency, is having a negative impact on the price of Bitcoin. The respondents said 80% no, but I think it might be. Bitcoin, a lot of people buy Bitcoin when they're frustrated with how government is functioning. It's kind of a disillusionment asset. And, to the extent we get major sustainable cuts in the U.S. budget deficit, I think that'd probably be a negative for Bitcoin, all things equal. Too early to say whether that's been the case, but I think Doge is surprising some people on the upside in terms of the cuts that they look likely to make.
Before we continue with the video, let me tell you about a serious problem affecting millions of people worldwide: data breaches. Data breaches are happening more often than ever now, exposing millions, even billions of personal records to the wrong hands. Your private information, like your address and phone number, can't end up on public websites for anyone to potentially access and find. That's why today's sponsor, Delete Me, is so important. I use Delete Me to help me with this issue. It's an easy way to protect your privacy online by removing your personal data and details from hundreds of data broker websites. I trust them because they make protecting privacy seamless, easy, and stress-free. All you need to do is submit your personal information details, and within a week, you'll get a privacy report showing where your data was found and removed. Plus, Delete Me keeps monitoring these sites all year long to make sure that your information stays private. Go to joindeleteme.com/David Lin in the link down below, or scan the QR code here to get started and get 20% off on all US plans. Take back your privacy today.
Well, this also segues into a tweet from Brian Armstrong, Coinbase CEO. Great progress, Doge. Imagine if every government expenditure was done transparently on chain. Would make it much easier to audit. What do you think of that? Putting everything that the government does on chain.
I guess it depends what chain. And Elon Musk also tweeted about this a couple weeks ago, that they are evaluating some blockchains as a database to store records of government spending. Um, it, if there are other countries in the world that have experimented with this, Estonia, Georgia, the Middle Eastern country, Sweden, Guatemala put their election results on the Bitcoin blockchain, and a number of U.S. states are and have investigated storing government records on open source blockchains. I think it would give U.S. citizens more confidence in how their spending is being executed. But again, the devil comes down to the details. There's a number of blockchains that function similar to permissioned database where, the number of validators is capped. Not anyone can get in there and verify every transaction. But if this were to go on something truly permissionless and open source like Ethereum, where the blockchain explorers are very well developed, then I think that would be tremendous for U.S. citizens to see how payments are being made and where funds are coming from and where they're going.
Now, going back to your statement about Bitcoin being correlated with other risk assets like equities, are you then assuming that if Bitcoin were to reach somewhere north of $150,000 towards $180,000, that equities would also follow a similar trajectory? In other words, is VanEck also bullish on the NASDAQ for the remaining rest of the year?
We're a bit more balanced on the U.S. versus non-U.S. part of the markets. It's been a great few years for tech stocks, and historically, Trump presidency was associated with a weaker dollar, and a weaker dollar tends to boost the returns of non-U.S. markets. Commodity producers. Of course, Bitcoin is a commodity, so we think Bitcoin could act very well under these circumstances. But I'd say we're, constructive about equities generally, but see a bit more of a mixed performance with U.S. tech stocks outperformance, maybe not as pronounced this year as in the past couple of years.
Okay, well, let's just get down to it. The Bitcoin strategic reserve I referenced earlier, do you think it's actually going to happen, at least in 2025?
Our prediction is that either the U.S. federal government or at least one U.S. state will establish a Bitcoin strategic reserve. Right now, the odds at the federal level in the betting markets are about 50%. So it's a toss-up. I agree with your comments at the outset that there are a lot of optimists on this. My generalization is that the optimistic takes are happening outside of the U.S., where there's a bit less sophistication around how the bills become laws, right? Like less than 1% of bills actually become a law. So, the prospects for Senator Loomis's legislative approach to a Bitcoin strategic reserve, I think, are well below 50%. But when you add in the possibility for the Treasury Department to do this unilaterally at the direction of the president, along with all the states. There's now more than 20 U.S. states that have introduced some version of a Bitcoin strategic reserve. Some of these efforts or bills are less risky than what Senator Loomis has proposed, which involves, putting some taxpayer funds at risk. Some of the state bills would allow these states to collect Bitcoin as taxes, fees, and fines, and then hold that Bitcoin for 5 or more years, which would establish a reserve more organically. I think those bills have a higher likelihood than the federal legislation of passing. And I think that if a major state like Texas or right now Utah, which is most advanced in pushing this legislation across, if a state is able to get one of these signed into legislation, I think that will be enough to catalyze the rest of the world to accelerate their plans. So there have been a handful of countries around the world whose legislators have introduced possible new laws. None of them are particularly far advanced. I do think one of these states moving would accelerate that process. Our view is that a strategic reserve for Bitcoin would send a symbolic message of leadership and innovation and provide a financial hedge against a future we don't 100% control. And you just need to look at central bank gold buying in the 3 years since the Russia-Ukraine war started. It's up only. Today, the Chinese insurance regulator, for the first time, is allowing the 10 largest insurance companies in China to buy gold up to a 1% allocation. So there's clearly so much demand around the world for these neutral assets. And we think that if the US were to adopt a strategic Bitcoin reserve, that would help ensure American dominance in energy infrastructure, in AI, and also in Bitcoin simultaneously.
There was a tremendous disappointment in the first week of Trump's inauguration that he did not sign a Bitcoin strategic reserve as an executive order, at least not yet. People online even used really strong language like backstabbing and betraying the Bitcoin community. But how did you feel? Were you surprised at all?
No, I wasn't surprised at that. I think it makes sense to have this working group led by David Sachs evaluate the opportunity and put forth suggestions. Doing this in, following a process for this decision will make whatever is the end result, I think, hold up a bit more in the courts because if they had announced something on day one, there probably would have been lawsuits to try to stop it. So gathering consensus from the industry, putting pen to paper on the pros and cons, I wasn't disappointed. I think that that's the more prudent way to do it. And like what they're trying to do is to incentivize growth in the US, bring some of this innovation back on shore, incentivize domestic energy infrastructure, which aligns with the US strategic goals for energy independence and sustainability. I think it's one big story that Trump understands. He often talks about Bitcoin and AI together in the same sentence. So it makes sense to have a cohesive plan.
Interesting. Well, what do you think of altcoins? Is it altcoin season yet?
We had a brief altcoin season, didn't we? November, December. And now the altcoin drawdown, roughly 35%, is the biggest post-election correction for altcoins that we've seen in the last two elections. I think part of that has to do with Ethereum specifically, which has been underperforming, and there are some legitimate questions about the roadmap for Ethereum going forward. And then a lot of it has to do with oversupply of tokens, right? So the altcoins have become victims of their own success. It's so easy to create a new meme coin these days. Nearly 400,000 have been created monthly over the past couple months. And that new supply is just soaking up a lot of the dollars that might have gone into a smaller universe of coins. I still think that these kind of layer one tokens like ETH and Solana, and there's a handful of others, have performed reasonably well on a volatility adjusted basis. This is part of the market where you can still stake your coins and earn a rate of return that in some cases exceeds the inflation rate for some of these projects. So still pretty optimistic that the L1 ecosystem will work relative to Bitcoin when we look back on 2025. But there is a long tail of applications, infrastructure, meme coins with unattractive tokenomics and oversupply. And we've always believed that 99% of these coins are not going to have enduring value.
The fear amongst some altcoin investors is that retail investors learned their lesson from 2022's big market crash that wiped out a lot of these so-called projects that, as you alluded to, have no intrinsic value. And now they're hesitant to get back in. And indeed, many metrics show that retail interest is lower this bull cycle than the last. So what would it take to bring back the same level of interest as what we saw in 2021?
I think part of that has to do with the availability of leverage. So last cycle, there were a number of centralized companies like BlockFi and Celsius that had literally tens of billions of dollars of consumer deposits, allowing retail to get leverage on their Bitcoin. All those companies went bankrupt. So I think the consumers are a little bit shy on kind of getting the easy leverage. There's still, leverage in DeFi, uh, um, but it, uh, as traditional finance intermediaries, the big balance sheets, the Wall Street banks and brokers, they're choosing to get involved in this space not by opening a crypto exchange and letting you deposit your Bitcoin, but by providing leverage into the regulated part of the market, ETFs, options on ETFs. And I think you'll see this leverage expressed more through the kind of traditional finance value chain. And judging by the number of inbound calls that we're getting here at VanEck to explore allocations into our Bitcoin ETF and some of our private strategies, it seems to me that the financial advisors specifically are going to be kind of the gateway to crypto this cycle.
Can you give us a hint or teaser, whatever you can disclose as to what the next ETF that VanEck could be launching within the crypto space?
Sure. We have filed for a Solana ETF, spot Solana. We were the first to submit our initial prospectus to the SEC. This was last year. Gary Gensler's SEC did not accept that prospectus into the Federal Registry, so it kind of sat there in limbo. Our exchange partner, CBOE, resubmitted their rule change request last week. Guidance indicates it will be accepted into the Federal Registry this week, starting the 270-day clock for that product to list. So on the Solana front, and we're not the only issuer, it looks to me greater than a 70% chance that there will be a handful of spot SOL ETFs in the market this year. I also think the odds are pretty high that staking will be allowed on Ethereum and Solana ETFs by the end of the year. And then lastly, we have filed for an on-chain economy ETF. This would be actively managed and own some of the equities in the space. And there have been a number of IPOs that are probably coming over the next couple quarters. So the market cap available in the equity side, companies that touch the on-chain economy, whether that's miners, exchanges, payment gateways, data center companies, even companies in the energy infrastructure sector that are specifically selling energy into Bitcoin miners. This might be an interesting area to look for alpha this year. So we filed for an actively managed product to own those names.
That's interesting. And staking in an ETF, how would that work, Matthew?
So in Europe, where VanEck has a wholly owned subsidiary with a number of crypto ETFs in the market, we are staking about 70% of our Ethereum. And that yield is passed on to clients. The operations of that, we had to build some internal dashboards and algorithms that will help us determine what's the ideal amount of ETH that should be staked relative to our expectations for redemptions. Because the thing about an ETF is you have to be able to meet client demand for redemptions every day. That also involves backup agreements with banks and brokers who could provide a line of credit in case the withdrawals from the fund exceeded the amount of liquid ETH relative to staked ETH. So some of those mechanics in the US are still being worked out, but there's a number of ways to do that, whether or not you stake a specific portion of the fund or even potentially integrate some liquid staking tokens, such as staked ETH.
And why particularly Solana as an ETF product? What's the use case of Solana that most excites you?
Yeah, we're just bullish on the chain and think that it provides a tremendous amount of speed and usability for app builders. In January, Solana's revenues exceeded Ethereum. In fact, they exceeded the combined total of the next biggest proof of stake chains. The application revenue from Solana, meaning like the revenues that apps built on Solana is earning, also number one. Impressed with the team, noticing a lot more stable coins being onboarded onto Solana. So they are a legitimate competitor to ETH in terms of, having a chance to, over time, capture the majority of market share of these programmable blockchains.
And finally, I'd like to finish off on one of your tweets here. You made an interesting remark about the use case of cryptos in Latin American countries. So 20% of Latin crypto holders either sent value across borders or made a purchase with the funds. Not bad. Crypto is most used for investment and savings protection. However, receiving crypto as a reward stands out. It's interesting. The future of crypto, is it a medium of exchange? Is it used primarily for remittances? Is it a savings vehicle, investment vehicle, all of the above? My question really is, where do you see mass adoption happening, in which use case vertical?
Yeah, I think that for the answer to that question, it's about geography. I speak to many American investors who don't really see a use case for the crypto, and I don't blame them, because in this country we are spoiled for choice, financially privileged. We've all got a bunch of credit cards, debit cards, Zelle, Venmo, Cash App, and we are able to send value almost instantaneously to our friends and family through institutions that we trust. And we are also fortunate to have the strongest fiat currency in the world. But there's 1 billion people living in countries that have 10% plus inflation. There's more living in countries where they don't trust their government or they don't trust their institutions. And for those people, the ability to send and receive 365, 24/7, a permissionless asset has a real utility, and then to hold that asset in self-custody, not depend on a bank. So we look at this asset class. It's an emerging market asset class. The top 10 countries by crypto adoption, 9 of them are emerging markets, and that's the lens through which we look at crypto. Bitcoin's most persistent correlation is a weak dollar, so it's a way to get emerging markets exposure in a very small position size, given the volatility. And in the US, we're accessing like the speculative aspects of crypto, the number go up technology. The rest of the world, Latin America, Asia, the Middle East, Africa, they're accessing the real world utility, holding this asset in a cold wallet, sending it peer to peer to somebody without government interference.
And for the government, the state level, what does a crypto asset or a digital asset mean for, let's say, the U.S. Federal Reserve or European Central Bank?
Yeah, so in our longest term model for Bitcoin, and where we get to a multi-million-dollar price target within a couple decades, we do assume that Bitcoin will be held in reserve by central banks at a modest weight. And actually, the first central bank, the Czech Republic, has now put forward a proposal to study adding Bitcoin to their reserves up to a 5% weight. And then we also assume that Bitcoin becomes used as a settlement currency for global trade. And if you read the communications coming out of BRICS and Russia, they are clearly signaling that they're going to do this. Russia has seeded investments across BRICS in Bitcoin mining and AI infrastructure. They are telling their counterparties, we want to trade in stable coins, we want to trade in Bitcoin. And crypto remittances globally are up 150% year over year. So we assume that a small single-digit percentage of global trade will be settled in Bitcoin over the long run, especially as some of the larger fiat currencies like the yen, the euro, and the pound begin to lose market share. And we can see that loss of market share. It's baked in the cake. The relative GDP of these countries, EU, UK, and Japan, continues to fall. Currency's value is very highly correlated with the relative GDP. So the question is, what's going to fill that gap? Is it going to be politically managed currencies like the ruble and the Chinese RMB? Or is the US going to help support a neutral currency like Bitcoin that can take some of the market share from those state-sponsored currencies? We think it's the latter.
And is China going to be a wild card this year in terms of policy shifting? Here, take a look at this article from Binance. China is planning to unban Bitcoin and crypto in 2025. Policy shift. The Chinese government is considering reversing its 2021 ban on cryptocurrency trading and mining. Market impact, potentially reintegrating China into the crypto market could lead to increased trading volumes and liquidity, potentially driving up the value of various digital assets. Do you agree with the last part of the statement? Potentially driving up the value of various digital assets. There's two sides to the argument. One is that it could, and number two, it's already happening in China anyway, so it doesn't really matter. So what's your take?
Yeah, we just met the CEO of a major Bitcoin ASICs manufacturer. So these are the companies that build the specific machines and semiconductors that are used to mine Bitcoin. This gentleman estimates that 15 to 20% of the Bitcoin hash rate is still in China, mostly in the western province of Xinjiang, and mostly being done by state-owned companies. Now, not state-owned at the federal level, but at the provincial and local government level. So I think that this has been happening all along, that mining has continued. And that's because China sees long-term strategic value in this asset class, but they have not opened it up to retail. It's kind of, still at the government and corporate level. And I don't expect that to change until and unless the Chinese RMB becomes a stronger currency, because they don't want to scare people and prompt a major amount of capital flight. I think they just want to be competitive in this new arena of innovation and leave it open as an option for some of the largest companies to use as a global trade settlement currency, particularly if the world continues to deglobalize.
Thank you for your analysis, Matthew. Where can we follow your work, learn more from you?
Sure. Follow me on Twitter, please, Matthew_Sigel, Sigel, and go to VanEck.com to subscribe to our digital assets research.
All right, we'll put the links down below, so make sure to follow Matthew, Sigel, and VanEck there. Thanks very much for your time, Matthew. Welcome to the program. Take care.
Thank you.
Thank you for watching. Don't forget to like and subscribe.